What is up, investors, and welcome back to the Everything Crypto Show. I'm your host, Everything Crypto, here to bring you the latest and most important news moving the crypto markets. Now, as always, please remember that nothing on this channel is financial advice. These videos are for viewer education and entertainment purposes only, so please invest responsibly as I want this community to thrive in the long run, and I love and appreciate you all. And on that note, we have a very important market update to get through today. We need to give you guys a little update on the situation with USDC blacklisting Ethereum addresses on government orders, FTX partnering up with Reddit to bring crypto onto the social media site, as well as Crypto.com finally unleashing some cash on that balance sheet, taking a play out of Sam Bankman-Fried's playbook and acquiring some crypto exchanges on the cheap as they do continue to build throughout this bear market. So definitely tons of stuff to get through today. And without further ado, it is time to sit back, relax, grab that morning cup of joe, and enjoy the show. Happy Wednesday, everyone. If you've not yet hit that sub and like button, please consider doing so and joining the Everything Crypto Squad, especially if you are a crypto investor, as the number one goal of this channel is to bring you all of the news that you need to know on a daily basis and keep you up to speed on what is going on in these wild markets. Now, I will be on vacation from August 12th to 25th, but I do have a ton of videos planned for while I am away, and I am already looking forward to coming back home and getting back into the crypto market updates. Also, do follow us on Twitter. We do a ton of giveaways. Link is in the description down below. And as I did say in yesterday's video, we are now officially a part of the Crypto.com affiliate program. So if you do want to sign up using my link in the description down below for some bonus rewards, definitely go ahead and do so. And I will be running a program where anybody who uses my link will not only be receiving bonus referral rewards through the link, but I will also be giving you all of the referral rewards that I would have received through your link. So effectively, you will be getting double bonus rewards, and that's just a way of myself saying thank you for supporting the channel and using that link. Now, hopping into the video, we got to take a look at the Bitcoin and Ethereum charts. They are pumping off the back of some very well-received inflation data, and we're not going to cover the inflation data in this video because I do want a little bit more time to actually analyze the numbers, and there is also a lot of important stuff to cover in this video. So we're going to break that down tomorrow more in depth. All you need to know right now is that the numbers were well-received. Bitcoin is back above 24K. ETH is back above 1,800. I did actually scoop some ETH yesterday up in the mid to high 1600 range, and not because I think that the bottom is in and that we're not going to see that level ever again, but rather because I think that before we go back down there, that there is a high probability that Bitcoin rallies up to 30K and that ETH rallies up to 2K. So you're going to notice here that now that we are back above the 200 week on Bitcoin, we have pretty much clear skies until that $30,000 level. And then likewise with Ethereum here, we have clear skies all the way up to 2,000. We also do have the ETH 2.0 merge coming in just about a month and a half, which should also build up a lot of hype as well. And that is definitely reflected in the ETH to Bitcoin valuation here. So you can see that in the midst of the capitulation phase, we saw ETH vastly underperform Bitcoin by about 30%. And then we also saw ETH rally against Bitcoin by 30% off the back of the ETH 2.0 hype. So ETH is coming up on a key level of resistance at $2,000 leading into the merge. It is also coming up at a key level of resistance versus its Bitcoin valuation. So I could definitely see some sort of scenario where ETH outperforms Bitcoin going into the merge, and then following the merge, Bitcoin does once again lead the pack and outperform Ethereum. Now, keep in mind that although I am looking for a short-term rally here, this does not mean that we cannot go lower. In fact, you're going to notice in 2018, we went here from about 5,500 up to 8,100, so a move of about 45%, and then we subsequently dumped all the way down to $3,000. Now, I personally am hoping we move back down. I would love to buy some more Bitcoin at that 20,000 level, and that is because you can see here in this tweet from Will Clemente, who is an on-chain Bitcoin analyst, you can take a look at the COINBASE order book for Bitcoin, and there are a ton of buying bids stacked from 17K and below. A lot of people are hoping to buy Bitcoin lower, probably the same people who were looking to buy at 28,000 in 2021 before we ripped all the way to 69,000. And the last time the order book was this skewed was the grind up from the March 2020 lows. So what you can basically see here is a massive concentration of buy orders down at these levels that were never hit. And now we are once again seeing a huge concentration of buy orders from 17K all the way down to 10K. Now, personally, I have a $100,000 price target on Bitcoin, and I do tend to believe that if the masses are waiting for 17K on Bitcoin that the whales are going to see this and they're not going to let Bitcoin touch 17K. So if we even get to 20K, I mean, when you're looking at a 100K price target, I don't really care if I'm grabbing it at 20,000 or 17,000. So I would rather get ahead of the masses who are trying to buy cheaper and just buy some Bitcoin at 20K. It's a 2018 all-time high. It is a pretty strong magnet for Bitcoin. As we've seen, we've gone below it, we've gone back above it, we've touched it. 20K is a magnet for Bitcoin in my opinion, and that is where I will be looking to buy more. So definitely keeping an eye on Bitcoin, just as institutional investors have been keeping a big eye on Ethereum in anticipation of the merge. So Ethereum is still seeing huge inflows. It actually saw inflows of 16 million this week and is enjoying a near 7 consecutive week run of inflows totaling 159 million. This turnaround in investor sentiment is due to greater clarity on the timing of the merge, where Ethereum shifts from proof of work to proof of stake, and this is expected to come in mid-September. Now here is basically a look at the weekly crypto asset flows in the millions, and you're going to notice here that between 2021 and 2022, here we did see a ton of outflows throughout the bear market. However, now we are beginning to see these inflows come back in. It is definitely a bullish indicator that institutions are really looking to invest back into crypto. Now, they also do believe here that buying behavior indicates the sentiment surrounding Bitcoin has hit its bottom as well, as Bitcoin saw very minor outflows totaling 8.5 million, while short Bitcoin investment products saw a record outflow of 7.5 million for the second consecutive week. This suggests that investors believe Bitcoin prices have troughed for the most part. Now, again, this is something that I do tend to agree with more. I think we might make another move to the downside in November. I really think that the bear market is not over yet, but as of right now, I do believe that we have hit a local bottom. I don't think we're going to see 17,000 on Bitcoin anytime soon, and that is why, once again, I am looking to buy more at that 20,000 level. Now, we got to talk about the USDC blacklisting situation. We did cover this in yesterday's video, and this is incredibly concerning in my opinion. It does leave a lot for crypto investors to worry about when it comes to the future of our privacy and security on the blockchain. So we can see here that Sasal.eth tweeted back in June or July that a lot of people are learning about the USDC blacklist function today, in which Circle can freeze USDC in any address at any time for whatever reason. This is the risk of using centralized stablecoins, just like using any centralized service. Now, Jeremy Allaire, who does work over at Circle, went ahead and tweeted back saying, "Not accurate, not helpful FUD, read more." Now, not even a couple of months later, the United States banned crypto mixer Tornado Cash. If you do want the full scoop on exactly what happened, definitely check out yesterday's video. And in response to the US actually banning Tornado Cash, USDC went ahead and blacklisted every Ethereum address sanctioned by the US Treasury. Now, we have been saying for a while on this channel that Circle is completely centralized, and so is USDC, as they really do want it to become the US CBDC, and they will do whatever they have to do with governments to actually go ahead and achieve this. So this sets a very concerning precedent that if you have USDC in any of your Ethereum addresses, that Circle can pretty much freeze your USDC at a dime's notice. That is absolutely horrible. Definitely something that is not very healthy for the crypto space, and the assault did not stop here. So now Ethereum infrastructure project Infura and Alchemy are also blocking access to Tornado Cash. Infura is the default RPC provider of MetaMask and is a leading provider of key Ethereum infrastructure. And guess who owns some of this key ETH infrastructure? No one else than JP Morgan. And if you've been with the channel for a while, this would come as no surprise. In fact, we actually reviewed this exact article about a month ago. So essentially, Ethereum has a massive stake in Consensus that is actually the creator of MetaMask as well as Infura. So that means that essentially JP Morgan. And if you have been with this channel for a while, this would not come as a surprise to you. In fact, we did cover this exact article about a month ago. So basically, JP Morgan does have a very influential stake in Consensus AG, and these are the creators of both MetaMask and Infura. So JP Morgan is effectively indirectly participating in this blocking of access to Tornado Cash. And I think now we are starting to see some of the key problems with the centralization of Ethereum. So listen, guys, don't get me wrong. wrong, I am a massive Ethereum bull. It is the largest position in my portfolio, and I really do believe that ETH is the chosen one because all of these banks and financial institutions, they really want Ethereum to succeed, and I have learned that if big money does want something to succeed, that it will. However, this does also come with the added problem of this big money concentration in Ethereum. We have big banks like JP Morgan all over that Ethereum infrastructure, so inherently it is more and more centralized, and now we are starting to see the issues with this, right? So Circle, that obviously runs their USDC on the Ethereum blockchain, they can go ahead and freeze all the Ethereum addresses, freeze people from actually going ahead and withdrawing their Circle, and I think this really just sets a dangerous precedent. And I think the big problem with this here is, listen, there is definitely a lot of crime that goes on with Tornado Cash, right? Hackers who basically steal money and then filter it through Tornado Cash so nobody can track where the crypto has gone to and from, and that is definitely something that did need to be addressed somehow. However, there are also ethical reasons to go ahead and use Tornado Cash, as highlighted by Vitalik Buterin himself here. So he actually admitted to using Tornado Cash earlier this year when donating funds to the Ukraine. He basically added that he used the protocol as a means of protecting the recipient's identity rather than his own. Hence, outing himself did not defeat the purpose of the transaction. And basically, this is the reason it is incredibly problematic, because while people did use Tornado Cash for crime, they also used it for good, for privacy, for security, and for anonymity, and now the government is taking this away. So in response, we do have a very interesting character. I don't know yet if he's a hero or a criminal, and basically what he's doing is he's sending 0.1 ETH straight from Tornado Cash to the public wallets of influencers and well-known celebrities. And the reason I definitely believe he is doing this is just to make a point of, well, what are you going to do? Are you going to go ahead and ban all of their addresses now for receiving Ethereum through Tornado Cash? In fact, Sasal.eth is on this list, one of the Ethereum developers, Wendy.o, Jimmy Fallon, Puma. So they're really going after like big celebrities and big names in the crypto space, all to make the point of basically, to what ends does this go? Are you going to ban every single wallet address who has interacted with Tornado Cash without having any reasoning behind it? So this is a very, very interesting situation indeed. I'm really curious to see how it does unfold. In fact, I would not be surprised at all if this Tornado Cash sanction does actually lead to the next bear signal for the crypto markets. Now, this article here is a pretty interesting read. What it basically does is compares what's happening right now with what happened with Terra Luna a couple months back, and I'm going to start off with the differences. So for starters, right now we're talking about 430 million cumulatively that is being sanctioned and frozen, and with Terra Luna, we were talking about like billions of dollars in TVL. So just by scale, I mean, Terra Luna did have much bigger reach. However, this is where they can be incredibly similar. With Terra Luna, we saw the big collapse of this ecosystem, right? We saw Terra go from like over $100 down to a fraction of a penny. We saw Luna, which was supposed to be a stable coin, completely lose peg from $1. And it really did not take until a couple of weeks after to truly experience the impacts of this Terra Luna crash. We thought that we had seen it all happen initially, but then boom, a couple of weeks later, 3 Arrows Capital folds, and then we had Celsius Hall withdrawals, and then we had Voyager Hall withdrawals. And it just goes to show you that we didn't really see the impacts of Terra Luna right away. It did take a couple of weeks for the waves to really spread and have that ripple effect on the rest of the crypto market. And it could definitely be a very similar scenario here with Tornado Cash. Like, what if in coming weeks, the government gets more aggressive and forces USDC to blacklist more addresses and therefore halt even more funds from being withdrawn? That could really create a big lack of trust. It can make people feel not secure, or that their privacy is not being protected on the blockchain, which could definitely lead to another big washout or sell-off in the crypto markets. So definitely something I am preparing for. Guys, long term, I am a crypto maxi. I am a huge bull, but we do also need to manage our risk and try and take advantage of potential buying opportunities. And this is something that I will be keeping an eye on, or really trying to anyways, over the next couple of weeks, because it could definitely create some very interesting buying opportunities on a move back to the downside. And unfortunately, we did also see another hack in the crypto markets today to the tune of $570,000 worth of tokens, and this was a hack that was targeting Curve Finance. Now, Curve Finance is a relatively big project. It is in the top 100 in terms of market cap, and it is essentially a decentralized exchange for stablecoins, uses an automated market maker to manage liquidity. So sort of similar to Pharaoh Protocol, a stablecoin swapper that does have low slippage, and it was incredibly popular. However, there definitely was some sort of a weakness or flaw in their system that a hacker did take advantage of, and fortunately they were able to catch it pretty early. However, the hacker did still walk out with $570,000. Now, this is not as bad as the Nomad hack that we saw last week, in which 190 mil was stolen. However, it is definitely important to note that right now 30 mil of that 190 mil has been stolen. So first of all, to any of you out there who did actually steal funds and return them back to Nomad, thank you very much for returning those funds. So hopefully they can be given back to their rightful owners. And I really sincerely hope that nobody here did have their funds stolen. If you did, I really hope that you do get those back. Now, finally getting into some bullish news here for crypto, we have Interactive Brokers expanding their crypto trading features. Interactive Brokers is one of the biggest trading platforms in the world, and they have now actually expanded their crypto trading features to offer Link, Matic, Uniswap, and Aave. So customers now have access to 24/7 trading through an enhanced web application from Paxos Trust Company, and can hold both USD and crypto in your Paxos account. This is a way to actually offer Interactive Brokers clients a simple and low-cost way to access crypto markets at any time. And Interactive Brokers customers who trade with Paxos will be paying a commission of 0.12 to 0.18% of their trade value, with a minimum of $1.75 per order. This new offering is cheaper than a handful of other crypto exchanges, including Coinbase and Gemini, both charging a 1.49% transaction fee for market orders. So definitely very bullish for crypto. I think that's even cheaper than Binance and Crypto.com. So very interesting to see that like these traditional brokers are also beginning to expand into these crypto trading features. It definitely could mean some competition for these newer exchanges who only offer crypto, as obviously Interactive Brokers does offer a ton of other investment vehicles, including stocks. Now, the reason this is so big is because if we actually take a look at Interactive Brokers assets under management, that is 363 billion. That is not a joke, okay? When we're talking about a crypto market cap of 1 trillion, that is effectively about 36% of the total crypto market cap at the moment. And let's say if even half of this was to flow in to crypto, that would represent upside of about, what is that, like 180 billion? Yeah, it's about 180 billion. So that is definitely not a joke when we're talking about a crypto market cap in the $1 trillion range. Having this open access to an additional 363 billion in assets under management is definitely a significant amount indeed. They could be taking some of the customers away from Coinbase here, who got absolutely destroyed in their after hours earnings report. Their revenue fell 31% to 803 million in Q2 of 2022. This is definitely something that we do want to take a look at, as although Coinbase has been losing market share in recent years, they are still one of the biggest exchanges globally. So it is definitely important to really take a look at what is going on with their financials and kind of get a gauge on what may be happening with some of these smaller centralized exchanges. Now, if we take a look at Coinbase's revenue here over the past couple of years, you're going to notice that in 2020 they earned 1.27 billion and earned 322 million of that. So about 25% of their revenue was profit. And then in 2021, off of 7.84 billion revenue, they earned 3.62. So here in 2021, they had like over a 50% profit margin, which is insane, just under 50% actually. However, now taking a look at 2022, what you're going to see is they earned 3.62 in the full 2021 year, and now so far in Q1 they went ahead and lost 429 million, and couple that up with another 1 billion loss in Q2, and so far they have lost about 1.45 billion so far this year. So they have basically gone from being incredibly profitable to being incredibly unprofitable, in fact taking a loss on their revenue. Definitely very, very concerning. It does show you that a lot of these centralized exchanges are really struggling right now, and that is why it is even more impressive that Crypto.com is still unleashing their balance sheet to make some acquisitions, which we will get into in just a second. First, we do need to mention the fact that the great CRO-SSING is finally here, in which the Loaded Lions and Cybercubs say goodbye to the Crypto.org chain and make their way over to the Cronos chain. We have been talking about this for months, how the Cronos chain has a massive push for GameFi, and it really only makes sense for the Lions to be on the Cronos chain to participate in this upcoming Cronosverse. So you can see here from this Twitter profile, if we click on their NFT profile here, their loaded lion was officially airdropped to them about 4 hours, and they are no longer on the crypto.org chain. They are now on the Cronos chain. Pretty cool. This one also does have that crypto.org mask, but they are no longer on that chain. So definitely very, very cool indeed. Now that the great CRO-SSING has sort of like commenced and it is almost done, I am really looking forward to see what they do next with these lions now that they are on Cronos. There's definitely a ton more they can do. Cronos is EVM compatible. It is built to be interoperable with the Unity and Unreal gaming engines, and I just see a lot of big things coming up for this NFT project. So the great CRO-SSING has finally happened. Now we're going to get into the big news for crypto.com, and this does come off the news yesterday that they did actually receive regulatory approval in South Korea. Now they've actually acquired some South Korean companies to compete with the existing local giants. So crypto.com went ahead and announced that they acquired South Korean payment service provider PN Link and digital asset exchange OKBit. Both companies hold the Electronic Financial Transaction Act and virtual asset service provider registrations, certifications for customer safety, which means that they now transfer over to crypto.com. It would appear that the crypto.com team considers its entry into South Korea to be critical, and in a statement, Patrick Yoon, the general manager of crypto.com in South Korea, said it is a tremendously important market for crypto.com in advancing a blockchain technology. So historically, cryptocurrency has been incredibly popular in South Korea, which combined with restrictive capital controls often leads to a higher digital asset prices on local exchanges, allowing for some very lucrative arbitrage. So we already know that crypto.com has over 50 million users, and according to Korea Herald, about 15 million people in South Korea hold accounts at crypto exchanges, but only about 6 million actively trade. So the CEO does say, we are committed to working with regulators to continue to bring our products and services to market, particularly in countries like South Korea, where consumers have shown a strong interest and adoption of digital currencies. They will definitely not be short of competition, as South Korea does have the big four platforms, but I definitely do think that crypto.com can do a ton to really penetrate this market, and this is all a part of their strategy to really get that regulatory approval and become the one-stop shop for all your crypto needs, not just in North America, not just in Europe, but on a global scale. So very, very bullish to continue expanding that brand name through regulatory approval, and now they are finally starting to open up that balance sheet, starting to acquire some cheaper companies, and that is definitely what we like to see from the team. Now, last but not least, after they did actually announce this approval and acquisitions in South Korea, they did also have a booth here. This was the Korea Blockchain Week, so they're pretty much introducing these citizens to the Cronos chain and what it does have to offer. And you can see here that they do have Minted, one of the newer NFT platforms launching. They have VVS Finance. They talk about how Cronos is the first EVM-compatible blockchain network built on Cosmos. I believe that's DG Pals down there, another metaverse game. I'm not 100% sure, though. And then they basically have some reasons of why people would want to build on Cronos and join the Cronos network. So definitely entering this market hard, regulatory approval, acquisitions, and this booth at the Korea Blockchain Week to really show people exactly what value CROcoin does have to offer with this underlying infrastructure. Now, last but not least, before we get into some centralized exchange stuff, I want to talk about SWEATCOIN real quickly. This will be launching in September. If you guys have not yet downloaded the SWEATCOIN app, you can do it with the link in the description down below. And in September, all of the sweat that you have earned through walking and running will be converted into an actual ERC20 token called SWEAT. That is right, SWEATCOIN is one of the newest move to earn apps, and they will be officially launching in September, so you can definitely use my link in the description down below and get yourself signed up before the ERC20 launch. I cannot wait to see this go live and see what value the Sweat team can bring to the new move to earn space. Now, we're going to get into the centralized exchange stuff. First, talking about FTX bringing crypto swaps to Reddit. So, Reddit went ahead and enlisted FTX and Arbitrum to launch its tokens on the Ethereum mainnet, and users can move Reddit's community points to Arbitrum-built Ethereum wallets and pay gas fees with FTX Pay. So definitely very, very interesting that now Reddit has gone ahead and integrated their crypto onto the platform through FTX, and they're basically going to have these community points tokens using fiat. So I guess now community points will actually translate into physical dollars. And it says here that users need ETH for gas fees to transact with their community points on chain, and FTX Pay allows them to do that. So you can now actually get paid in crypto for making popular posts on Reddit. This is definitely very, very interesting, and something that I do think will become more and more prominent on social media moving forward. Some sort of way to like tip or either reward people for really good posts through cryptocurrency transactions. And I'm really curious here because I know that Polygon does actually have a partnership with Reddit, so I am a little bit confused as to why Reddit went with Arbitrum for their layer 2 as opposed to Polygon. That was definitely something that caught me off guard, but definitely still very interesting news nonetheless. And I would like to see how this actually does play out, and if other social media platforms do sort of adopt a similar strategy moving forward. Now, to wrap things up, we're going to talk about Celsius. We do have a couple of things to talk about here, as the CEO, Alex Mashinsky, is back under the spotlight. We have regulators all over them, and Celsius has finally made an official statement, so definitely quite a bit to unpack. We now have a 7-member committee investigating Celsius CEO Mashinsky's conduct and the lender's problematic asset deployment decisions. Now, this really is the main problem here, that Celsius was offering an unsustainable yield, and the degenerate DeFi strategies that they were participating in with their users' funds to actually upkeep these unrealistic rates. So definitely very irresponsible on behalf of Alex Mashinsky. He did assure people several times on Twitter that Celsius was completely healthy. They were not in any financial trouble. They were not going to halt withdrawals, and then they did turn around and do exactly that. So there definitely does need to be some sort of a committee that is investigating Mashinsky, but more importantly, this committee does aim to prioritize interests of Celsius account holders throughout the firm's bankruptcy, and this is what we really need. People who are putting the customers first, trying to put the money back in their pocket, because honestly, even since Celsius has halted withdrawals, they have not been very good with communicating with their customers. It appears they don't even really care to give their customers back their funds, and they're more worried about Celsius rather than the people who actually supported Celsius. So I definitely like the fact that this committee has been introduced. I really do hope that Mashinsky is held accountable, and I really, really hope that everyone who has funds locked on this platform does get that back. Now, it is not just the US that has been really probing Celsius. We now have Canadian regulators all over this as well, and that is because Celsius was also available in Canada, although I personally never opted to use it for a bunch of the reasons that we have discussed in the past. They are now being investigated in Canada as well, and good. They definitely need to be investigated in as many countries as possible. They do need to be thinned out. They cannot be allowed to continue operating like this if they do somehow survive. So Canadian regulators are now collaborating with the SEC in the investigation, and the SEC is also working with regulators in several states, including Texas, according to the Financial Post. Celsius Network amassed 1.7 million clients. It owes its users around 4.7 billion, and there's approximately a $1.2 billion hole in its balance sheet. So definitely happy to see some pressure finally being put on Celsius here by additional regulators, as really since they've halted withdrawals, the Celsius team, I don't think they've put enough pressure on themselves to solve this. They have not been very transparent with the community. It does not appear that they're working hard to really figure this out, and it really looks like they're more worried about saving their own grass than saving their customers. So definitely not impressed with the way the team has handled it, and I do believe that all of this additional pressure from regulators has caused the Celsius committee to come out and make an official statement. Now, this committee did not hold anything back, okay? In fact, they really gave it to Alex Mashinsky here for lying and for making false claims and empty promises. But I think at this point, pretty much everybody knows that Mashinsky was a liar. So what I really want to focus on more so here is what the committee intends to do to turn things around. And they did highlight that out here in 5 different steps. So firstly, the committee intends to ensure the debtors are effectively safeguarding their account holders' assets. Second, they intend to oversee the debtors' efforts to develop a viable business plan that reduces overhead and preserves the debtors' limited cash reserves. Third, the committee intends to thoroughly investigate the conduct of Mashinsky and other Celsius insiders, including the problematic asset deployment decisions. So pretty much a very fancy way of saying the degenerate DeFi gambling strategies that they did deploy. Fourth, the committee will explore strategic options to reorganize or sell the business to maximize value for account holders and unsecured creditors. And finally, the committee is going to work on being openly transparent and communicating with the community and stakeholders. And this is the number one, in my opinion, as the Celsius team has not really been transparent. I mean, obviously not before things fall through, but not even after things have fallen through have they stepped up to talk to the community more. So the committee behind the Celsius restructuring has made a Twitter account. I am going to follow them to hopefully try and just keep up to speed on the updates, and I would obviously want to relay that information to you guys. But they do say here they are prepared to work day and night to protect the rights of its constituents who have been harmed by Celsius' improvident decisions and is up to the task before it. And I really do hope this is the case. I sincerely hope that anybody impacted by Celsius halting withdrawals does get those funds back. And on that note, I hope you guys did enjoy the content in today's video. I will catch you in the next one. Peace out for now.